It's to do with disposal of non-current assets. The issue that arises with disposal of non-current assets, disposal meaning when we sell the non-current asset, we have got our own approximation of what the written down or the carrying value is. We must compare that to the actual amount that we received for the asset when we sold it. Let me explain this process by looking at an example. Let's just say a firm buys a computer. It costs 10 grand. The estimated useful life is 3 years. The estimated residual value is 1,000. So if we use the straight line method, depreciation expense is a cost minus the residual value. That's the amount that we think that we can get for it after 3 years when we sell it, over its useful life. So when we do the calculations, that's 10,000 minus 1,000, which is 3,000 divided by 3. Therefore, we have a depreciation expense of $3,000 every year. Let's assume that the computer was sold, right, for $3,800, but it was sold in December 2016. So what we have to work out is how much we think it's worth, and then compare it to this amount here for 3,800. So let's go and do that. So as you know, it got purchased on the 1st January 2015. That's 1 year, and the second year it got sold. In this year, you'll note that the accounting period runs from January to December. So the balance sheet as at the 31st of December 2015, let's just look at this. The computer, we know it cost $10,000. We've worked out what the yearly depreciation rate is. So the carrying value, or I call it the written down value after this time, is $7,000. Right? Now, after the second year, we'll see this. The computer was worth $10,000. We've accumulated another $3,000, so $3,000 there, $3,000 there, that makes $6,000. So we think our carrying value is $4,000. So you can see there's a difference here. We think it's worth $4,000, but we sold it for $3,800. So straight away, you know, oh, I've made a loss. So what do I do? So in this particular example, we've under-depreciated. So we thought it's worth $4,000 after depreciating $3,000 for 2 years, which amounts to our written down value or carrying value of $4,000. What's happened is that we actually only got $3,800, so we actually should have depreciated $200 more. That's really what it means. So therefore, we've under depreciated by $200, so we've actually got to allocate that as an expense. This is called loss on disposal. Let me explain that in another way. Here's an example. So we purchased the vehicle for 10 grand. We've had accumulated depreciation of $6,000 after the 2 years, which means a carrying value of $4,000. A sales price which we got for it, the cash, is $3,800. Therefore, we've made a loss on disposal, and that is classed as a general and admin expense. Now, if we have a different scenario, in this case a gain on disposal, let's keep the same assumption, except that our sales price was $4,500. So our carrying value was $4,000. We actually got $4,500. Therefore, we made a gain. Now that needs to be put down as an other operating revenue. So obviously, the gain on disposal is seen as a credit. Now, I'm hoping that's been useful to you.